Hi everyone, welcome back to this week weekly market update. So let's do a short one and review what's happening on the last week and things to watch out for the coming week as well. So for the last week, after my last post or my last video did mention that a lot of things has been happening to the market itself. So I will keep a close watch out on the index movement before diving deeper into the individual company positions. We'll review the index on the US market on Dow Jones. If let's say you have been, do not wish to participate too much noise in the market from the resistance and from the support level that I given from the past week on the past video, you shouldn't have any entry point by that point of time if you are doing position or swing trade. For intraday, definitely opportunity lies anytime, but it still depends on your risk appetite and do you have the flexibility to monitor the market during your working hours or throughout the day as well. So let's recap what's happening on last week. So on last Friday, we can see the S&P closed higher for the fourth day in a row. So basically to see for the past 1 week or the past week, market or the US index has been so-called a dead cat bounce going higher. As you can see from the chart itself, let's say you look at the day chart, you can see from last few days, the market has been rally for the past few days, right? So this is considered a dead cat bounce after a few drop, right? So right now market has been sideways, which I have been mentioning in my video. Market may consider to float sideways until the 90 days where the tariff come to the ending of the pause where mentioned by Trump. So just nice hit the June whereby the bonds have to pay the debts, right? I mean the US to pay the bonds debts, right? So that is what is happening. So market is really bullish. I don't think so. Bearish, still waiting for more news to coming up, right? So a lot of dead cat bounce happening, especially for this week. Last week is the earnings report. So good earnings eventually will make the market to be on the bullish side. So don't be overcrowded or overcrowded by what you see temporarily happening to the market itself. I'm not saying that I bearish to the buyers, but we should work based on what the charts tell us. All right, we should work based on what chart tell us. So do note that we can see that there are news speculating that US has been talking to China, but it is a one-side story. On China, on Thursday, China did mention that there were no talk with US on a potential trade deal so far. So is this the noise or US or Trump trying to create a noise to market say that, oh, everything is being settled, sentiment don't be that bearish, we should be stabilized and look into the market opportunities again. But it's just one-sided game, you get what I'm trying to say. So don't be confused by the news. Always do your own read up, own due diligence. All right. So for the coming week, take notes. Earnings continue. Beside earnings, heavy economy data as well. So like non-farm payroll, everything. Okay, another thing just want to mention, a lot of thing is got this thing called the front loading. So what is front loading is that we know Trump gives some days before the tariff started, correct? So those companies that want to avoid paying the new tariff, they will actually load their container, their goods, everything in March. That's why when China report, wow, their export is great, fantastic, don't over optimistic, because this is actually like, for example, the past whole year or maybe in a whole year of 2025 deal, they just move everything settled in March. That's it. So they don't have to pay this new tariff. So when will it kick in fact for the tariffs to kick effect is maybe the first 2 quarters after it's been settled out, the third quarter where the new tariff take place, they have to start paying the bills on it. You will then start to see the impact of it. So maybe this quarter is still fine, especially the front loading. So you will start to see the effect kick in, and that is where the dangers come about. All right, so let's take a look at the chart right now. So sorry. So this is Dow Jones, which I mentioned. Let's look at the weekly chart. So on the weekly chart on the 15th April, I did say market sideways movement between last two weekly candle high. So weekly candle high, let's take a look. Okay, 15 March is this one. So I'm saying we should range between the 42,400, which is 42,400 to 36,700, which is the bottom. All right, so we should actually range between these two candle. Okay, the high and the low. You get what I'm trying to say? The high and the low, we should range between here. So right now, the market is running in between. What do I mean by here? Here is the high, here is the low. The market is right now ranging in between. All right, so it's all the noise. Unless you go to the bottom, you try to pick it up, go to the top, you try to shut it down. That's it. Otherwise, you will be trapped easily in between if you do not have time to monitor. You get what I'm trying to say now? So no matter how the whole past 2 weeks has been moving, it's still stuck in between. All right, so if you want, you can zoom down to a lower time frame, and then you can trade in between. Okay, so what is happening right now? We can see that the dead cat bounce is becoming strong. Here is the W sign, so-called double bottom. All right, first neckline, or you can put a second neckline here. But looking at S&P, they broke above the neckline. Let me show you guys. So let's look at S&P right now. So for S&P 500, okay, we can see on the day chart, can you see the W? And the neckline used to be a support, break, turn resistant, and right now break above. Can you see that? Okay, so this W double bottom has been formed, and for the coming week, if good news, good earning reports continue, the resistance key level we are watching is 5,700. All right, 5,700. This key level, hopefully, if it breach, it shouldn't take over this part. If you take over this part, yes, market may go back to the bullish side. All right, so why I say that? Because if you look into the weekly chart, you can see that this is actually the 15-day moving average. Go up at 5,700 is resisted. Break above the sign, the signal is strong. And this market situations with the tariff, with the uncertainty, with the the news coming from Trump's, a lot of market uncertainty. To break above, it need a very strong catalyst to go through, or otherwise, if it reach here, it's a good support. I mean, a good resistance level for you to take action to do the shorting as well. All right, so that is my take. So for the coming week on 27th, earnings report may continue to push the index higher, but to watch out for the heavy economic data for the coming week, like non-farm payroll, initial jobless claim. All these may actually spike the index higher. So do watch out for the key resistance at 5,700. Spike above, close below, not a strong buy signal. Spike above, stay above, then a strong signal. Spike above, close below 5,007. You may take a short side with a good tight stop resistance, with a good risk management. All right, so do watch out for the index itself. Okay, so let's come to the next index. So go to Nasdaq. It's the same thing. I know Nasdaq, a lot of stock has been spiked up. So you can see here is the double bottom. If you realize, here is the neckline, it break above. Do you see that? Used to be support, then resistance, break above. So this is the dotted line. We are looking at 20,300. All right, if you want to look at the bigger time frame, can you see it? Here 50 days, so we are looking at this 20,300 break above, then the trend may turn to the upside. All right, so right now to watch out, I mean, for just the sake of me to recall back, I'll just do a writing. Okay, so here's the key resistance. Okay, so that's all for Nasdaq. Let's take a look at a few other counter. Of course, like I said, a lot of uncertainty. That's why we need to monitor the index closely before we go to the individual shares. So next is actually Tesla. Tesla, good movement on last Friday. All right, good movement on last Friday. But if you have been following me closely, I did do sort of write up. On the 15th March, the latest one, I said that Tesla will need to come back quickly, otherwise the bear may come in again. So 15th March is somewhere around here. Yes, around here where the market has been dropping, right? I said you need to come back quickly. So then next support is 200. 200. All right, drop below it will not be a good sign. So before that, on the 9th March, I did say next support level 250 followed by 222. Alright, so when it's here, I say 200, but it seems that the price has been stabilized at 225. If you realize, touch, go up, touch, go up, touch, go up, touch, go up. 225 is a good support level. If you pick it up for dollar cost averaging, alright, at this sentiment. So if you want to do short-term trading, also you need a good risk management. But if you're doing dollar cost averaging, if you're doing pickup of these shares, 225 should be a good price for you to pick it up, or 250. By around you should be in the profit when the market closed at 280 last Friday. That's why I say since January, Tesla is not for shorting. Any pullback is for you to long, long with a strategy of dollar cost averaging. All right, so don't ask me, can you long right now or can you short right now? It's hard to call. I know the earnings, the sales is not doing good, but assuming the sales is not doing good, the market still spike up. Of course, there is news coming for Tesla, right? If you pay attention, there's a couple of news from Tesla itself. But ultimately, if purely based on technical analysis, you should actually, it's a good entry price for you to catch it when it pull back to 23.6 Fibonacci level for you to long upside. All right, so this is a very bullish candlestick on the weekly. It break above 38.2% Fibo. We are looking, will it come back to 300, 315, and then the trend remain intact. Can you see that? All right, if we break above, the trend remain intact, okay, on the upside trend, then it may continue to go higher. All right, so that's my call for Tesla. Next is actually US oil. US oil, I do some writing in my Telegram. If you have been following, I did mentions on the Telegram itself. We bias on the downside, waiting for a pullback. So I say that from the chart perspective, crude oil have broke the long-term support at $65. So since March, and then watching closely at $65 potential resistance, former support term resistance. So what do I mean by that? So you see here is a multiple support. Can you see that? Multiple support. All right, multiple support. Can you see that? All right, it break below and market pullback. This is what I mean. Pullback, watch out, support term resistance, then it come down. You get what I mean? So 65, 66, just $1 apart, is a crucial level. If you break above, in order for it to successfully turn the table to the upside, which I don't really think so at current economy, the demand is no longer there. Trump is going to start his offshore drilling, drill baby drill, right? So two key resistors to watch out, 65, 66, this level. If break, watch out, this descending triangle. You need to break above, then market may turn the downside to the upside sentiments. Otherwise, this level or this level is a good level for you to go short with the trend of it. All right, so do watch out on these two levels. I do mention already, so let me just do a write out. So 27 April 2025. More supply equals to price drop. Okay, so descending triangle. Okay, so that is my call for 27 May to watch out. Okay, so let me take a look. Yes, a lot of people pay attention to gold. Yes, let me just cover on gold. Quick one. So for gold futures, this is since 5 January. It never. I'm looking for the upside pullback, go up, but it didn't pull back to the level I want. So if let's say we look in gold for the daily chart, all right. So yes, of course, safe haven, inflation, hedge, right? So, but you don't want to long here. A lot of uncertainty, and you're buying at the high side. Of course, high can go higher, correct? But a lot of people, more analysts will actually play on the safe side, do risk management, wait for the pullback to go higher. So you can wait, continue right with the 50 days moving average if you want to. I think it's much more safer. So anything wrong, at least you have a tight stop loss to cut. Okay, so if you ask me what is my stand for gold, follow the trend. Trend is your friend, but we long only there's a good pullback. Okay, so that is my take. So for people who want to play safe, wait for the 50 days for the pullback that you enter. Okay, so I can just comment here. 27 April 2025. Wait for the pullback to 50 days MA before right the uptrend. Okay, so that's my take for 27 April. All right, so let's take a look. What else will I be covering? Okay, other index, like for example, Hang Seng Index. So let's take a look for Hang Seng Index. Okay, Hang Seng Index, Hang Seng Index. Okay, so for Hang Seng Index wise, Okay, a lot of writing. Let me see, is there a better one? TBC. Okay, so I mentioned 5th Jan, 22nd March. Okay, so right now let's just remove the whole thing. Okay, restart again. So to have a clearer picture, market spike higher, pull back, well supported by the MA. Can you see that? Go up from here. There is still a gap play. All right, there's still a gap play. All right, I'm biased on the upside for Hang Seng Index. Good support. This is a really chart. If it never float below here, I'm biased long term on the bullish side right now. Okay, unless it break below the 19,000, then it may continue right lower. So otherwise, I kind of liking this chart at this market sentiments. It's form a good channel if you can see by now. Where's my channel? Parallel channel. Okay, can you see that? Okay, it form a very good channel right now. Touch up, touch up, touch up, touch up. Ignore the market noise, ignore the tariff, follow the trend at the middle. I am biased on the upside from here. Okay, so let me just write. Okay, so today is 27 April 2025. Trade within the parallel channel. Okay, so that is my view for Hang Seng Index. Okay, so that's all for this week weekly market update. Yes, I'm not going to individual counters so far except Tesla, which I have talked about it. I think it's good. Coming week earnings is very crucial, like Microsoft, Meta, Caterpillars, all the big tech, Apple, Amazon. So just simply get any one of it. Okay, Apple, the one that actually got affected badly due to their factories in China, right? So after touching, can you see weekly touching the 200 days, it bounced back. So right now the market is trapped within here. It need more clarity from Trump before it can move out. But fundamentally, if tariff return back to normal, nothing big deal, factory continue, earnings will not be affected. This should go up from here. Alright, but is the pause giving Apple the time to re-strategize their business? Really have to move out? 10% tariff minimum have to stay still? Then it will somehow affect the earnings, and maybe in between waiting for either side, then we can make a decision from there. Otherwise, long-term perspective, it should be upside. So if you didn't manage to catch the bottom here, wait for some pullback, wait for some uncertainty become certainty on the tariff itself, then you can consider do DCA and long, or you can try or consider other Max 7 as well. Okay, so that's my view for Apple. I'm not going to write it because it's not in my watch list. That's all for this week weekly market update. Stay tuned. Continue to write and update the latest one in my Telegram. If you have not been following, please remember to follow my Telegram group. That's all for this week weekly market update. See you guys next week. Bye bye.